Before we jump in, I do earn a referral fee when you use the services and companies I demonstrate in the video, but there is no additional cost to you. I chose them because they're the best in the industry and you're safe with them.
Do you want to know how to reduce taxes on your W-2 income? Well, you've come to the right place. Picture yourself at the end of a taxing year, not dreading the tax bill, but rather looking forward to a smaller one. Sounds like a dream, right? It doesn't have to be. The key to this is understanding the ins and outs of the tax system. More specifically, how to reduce taxes on your W-2 income. Why is this important, you may ask? Simply put, it can help you keep more of your hard-earned money in your pocket. That's right, more money for vacations, investments, or even that dream house you've been eyeing. And who wouldn't want that? So let's explore this intriguing world of tax reduction together. And remember, every little bit saved is a step towards financial freedom. Stay tuned as we reveal some practical steps on how to reduce your W-2 income taxes. First off, it's important to understand what W-2 income is. Simply put, W-2 income is the money you earn from your employer, and it's reported on a W-2 form at the end of each year. This form is crucial as it shows your gross income, which is your total earnings before any deductions, and your net income, which is what remains after those deductions. Why is it taxed, you may ask? Well, it's because the United States operates on a pay-as-you-go tax system. This means as you earn income, you're expected to pay taxes on it. Your employer does this for you by withholding a portion of your paycheck for federal and state taxes. And the relevance? The W-2 form is the primary source of information for preparing your tax return. It determines if you owe additional taxes or if you're due a refund. Now that we understand what W-2 income is, it's time to delve into how to reduce its tax. One effective way to reduce your W-2 income tax is by maximizing deductions. Now let's delve into the exciting world of tax deductions. First up are standard deductions. These are a fixed dollar amount that reduces your taxable income. The beauty of standard deductions is that they're available to anyone, regardless of your expenses. For the tax year 2024, the standard deduction for single taxpayers and married individuals filing separately is $12,800. For married individuals filing jointly, it's $25,600. Next up, we have itemized deductions. These are expenses that you can subtract from your adjusted gross income. They include things like medical expenses, state and local taxes, mortgage interest, and charitable donations. To benefit from itemized deductions, your total deductions need to exceed the standard deduction. Lastly, we have above-the-line deductions, also known as adjustments to income. These deductions are taken before your adjusted gross income is calculated, hence reducing the amount of income that's subject to tax. They include expenses like educator expenses, student loan interest, and contributions to a traditional individual retirement account. Now, you might be asking, how do I maximize these deductions? Well, the answer lies in understanding your expenses and keeping accurate records. If you have significant eligible expenses, itemizing your deductions might be more beneficial than taking the standard deduction. For above-the-line deductions, consider making contributions to your retirement account or paying off student loan interest. If you're an educator, keep track of your out-of-pocket classroom expenses. Remember, deductions aren't about spending more to save on taxes. It's about making the most of what you're already spending. So, get familiar with tax laws, keep accurate records, and consult with a tax professional if needed. Maximizing your deductions can greatly reduce your taxable income, hence lower your tax bill. So why not take some time to review your expenses and see how you can maximize your deductions? It might just be the tax-saving strategy you need. Another great route to reducing your W-2 income tax is through tax credits. Now, if you're wondering what tax credits are, let's break it down. Essentially, tax credits are a form of tax relief provided by the government. They're designed to incentivize certain behaviors like investing in renewable energy or to ease financial burdens, such as the cost of raising children. Imagine tax credits as a sort of coupon you can use when paying your taxes. They directly reduce the amount of tax you owe, unlike deductions which lower your taxable income. In other words, if you owe $2,000 in taxes and have a tax credit of $500, you'll only need to pay the IRS $1,500. That's a dollar-for-dollar reduction. Quite the bargain, right? Now, there are a variety of tax credits available to taxpayers, and knowing which ones you qualify for can significantly decrease your tax bill. For instance, there's the Earned Income Tax Credit, designed to support low to moderate income working individuals. If you meet the requirements, this credit could reduce your tax liability and might even lead to a refund. Then we have the child tax credit. If you have children under the age of 17, you might qualify for this credit. It's aimed at helping parents with the costs of raising kids. And trust me, every little bit helps. And let's not forget about education credits. If you, your spouse, or your dependents are in school, you might be able to claim these credits. They're designed to help offset the costs of higher education, making it a little bit more affordable for everyone. Remember, the key to maximizing these tax credits is to ensure you meet the eligibility requirements and to claim them correctly on your tax return. It might require some homework, but the potential savings are well worth it. Unlike deductions, tax credits reduce your tax bill dollar for dollar, making them a powerful tool in tax reduction. Making adjustments to your W-4 form can also help reduce your W-2 income tax. The W-4 form, for those who may not know, is a form used by your employer to withhold the correct federal income tax from your pay. Think of it as your personal roadmap to tax withholding. Now, how does tweaking your W-4 form aid in reducing your W-2 income tax? Well, by adjusting your allowances and deductions on the W-4 form, you essentially control how much tax is withheld from your paycheck. For instance, if you increase your allowances or claim specific deductions, less tax will be withheld, thus reducing your W-2 income tax. Remember, the goal here is not to underpay or overpay, but to pay just the right amount of tax throughout the year. This ensures you're neither getting a large refund nor owing a big chunk at tax time. Properly adjusting your W-4 form can ensure you're not overpaying in taxes throughout the year. We've covered quite a bit on how to reduce your taxes on W-2 income. From understanding the ins and outs of your W-2 income to the art of maximizing deductions, we've taken a deep dive into the world of tax-saving strategies. We've explored how the power of tax credits can work to your advantage and how making adjustments to your W-4 form can positively impact your financial situation. In a nutshell, it's all about understanding your income, knowing your deductions, and leveraging the tax credits available to you. Adjusting your W-4 can also play a significant role. All these steps, when taken together, can help you reduce your W-2 income tax, leaving you with more money in your pocket at the end of the day. So let's put this knowledge to work. Start reviewing your income, deductions, credits, and W-4 form. Remember, a penny saved in taxes is a penny earned. Start reducing your W-2 income tax today.